Very good evening, everybody. Welcome to the live webinar on effective strategies to trade US stocks. I'm Ming Hui from Phillip Nova, and speaking to us tonight will be professional trader Phillip. Before the time is passed to him, we will first hear a short introduction of Phillip Nova from Sean Chow, representative from our business development team. Over to you, Sean.
Thank you, Ming Hui. A very good evening to everyone. I'm Sean, Business Development Manager from Phillip Nova. And today, I'm very happy to have all of you join us to talk about effective strategies to trade US stocks. As all of you might have seen, the US market has been in a very volatile period in the past 2 weeks, ever since they released the numbers for the NFP of 2 Fridays ago. And since then, it has been on a very wild ride with tech stocks going up and down, with oil retracing down. And then recently, we have also got the new Fed chairman being appointed also formally. Yeah, so today we hope to be able to share with you on what are some insights from Caleb, who is a professional trader, and also to share with you some of the services that Phillip Nova offer, and also our platform for your insights. Yeah. So before we begin today's webinar, just to share with everyone a disclaimer. So today's presentation is intended for general circulation only, and it does not take into account your specific investment objectives, financial situation, or needs of any particular person. And then if let's say you want to really invest in a certain product, do seek advice regarding the suitability of the product and take into account your specific investment objectives, financial situation, or particular needs. Today's session will be educational, and in no way there's any financial advice or recommendations provided. Now, for today, we will be introducing Phillip Nova as a company and also Nova as a trading platform to all of you. Following that, I will hand over the time to Mr. Caleb Gunn to share with you the insights that he has gained over his past years of trading experience on the US stock market. And then at 8:30, around there, we'll share with you some of the exclusive promotions because this is a collaboration between Caleb and Phillip Nova. And we also take on some Q&A from the crowd if you have any queries regarding the course or regarding the promotion. And we hope to end the session by 9 p.m. today. So a very quick introduction to Phillip Nova and Phillip Capital Group. Phillip Capital Group has been around for more than 50 years. And for those of you who know, there has been many major market events since 1975. We have got the Black Monday, the Asian financial crisis, the dot-com crash, the global financial crisis, and COVID-19 pandemic. And recently, there has been a lot of geopolitical uncertainty with the US war and also some of the different changes in interest rate. Yeah. So throughout all these market cycles, the equity market, the stock market, it has gone up and down. There have been many different exposures, but throughout all these cycles, Phillip Capital has always been here, and we have always been part of the group. So this is who we are in the local market for serving the needs of every trader and every investors. And a little bit more about Phillip Nova. So we were inaugurated in 1983, and to date we offer 21 global exchanges across multiple asset classes. So for us, we have stocks, ETFs, futures, options, FX, CFDs, commodities offered as asset classes, which investors or traders can actually participate in trading activities with us. And then for Phillip Nova, we also offer 24/5 support from our IT team and from our dealing team. Meaning to say, if let's say you require any on-the-ground support or live support, you can actually call in to us and really ask about the technical difficulty that you might be experiencing if let's say you run into any. And of course, very importantly, we are a regulated broker and we have been in Singapore for many years, right? So we are regulated under MAS, and we also are part of the institution under Phillip Capital Group. So that makes us one of Singapore's most established financial institutions. Phillip Nova actually started off as a futures asset class company, and that was where we built our base. And over the years, we realized that our clients, they actually expanded their needs towards other asset classes, such as Forex, such as CFDs and stocks. And with that, we also evolved together with the market to expand our products and services. So to date, we offer many different exchanges for equities and for CFDs and futures as well. Meaning to say you can actually get connected to global markets through us, and you can trade multi-asset through us. At the same time, we also have analysts who actually provide timely analysis and insights for you to seize opportunities with confidence. Now, what's so unique about us? We have this, like I mentioned, we have multi-asset trading within our Nova platform. What that means is that using one ledger balance, one single account, you can actually trade multiple asset classes. You do not have to switch between one wallet to another for the purpose of trading a different asset class. And on top of that, we also have shares financing, where we are offering rates of 4.5% for USD and Sing dollar financing. How does shares financing actually benefit you in your trading and investment journey? With shares financing, you have the flexibility to trade anytime, especially when the market conditions are right. That means that you can actually unlock more than what you have in cash, and you can get up to 3.3 times of your buying power depending on the collateral that is being used. That allows you to capture opportunities when stocks are moving, and you do not miss out on any movements due to the cash in your account. And at the same time, for long-term investors, we have very competitive forex conversion rates. I'm sure when most of you travel, you will start to compare the different exchange rates by the different money changes. We also have very good FX conversion rates. What do I mean by that? When you look at the different spreads between the different currency pairs, we have the conversion cost being lowered down to these percentages. Meaning to say, if you are depositing SGD with us and you're trading into a US market, the approximate conversion cost is only 0.12%. And in the long run, this actually saves a lot of money when you invest and your portfolio grow together with us. Because usually when you deposit, right, you incur one round of conversion. And if let's say you were to withdraw in Sing dollar, you might need to convert again back to your base currency of Sing dollar. So that's where the cost saving actually accumulates over the long run. Yeah, and importantly, we do not charge any FX conversion cost, meaning to say what you see on the platform is actually what you get in terms of the cost that you incur when you do currency conversion with us. So if you're interested, do find out more from us. And this is really very beneficial for stock investors who invest in the long run and are looking to grow their stock portfolio. Now, I'll quickly share about shares financing in the next video. So let's take a few minutes to listen to the video. Sorry, let me reshare the video again because I'm hearing that there's no audio. Please give me a moment.
Pick one to share about. Share margin trading or share your lunch?
Definitely share margin trading. Lunch can wait.
In one sentence, what is share margin trading?
Share margin trading lets investors use some of their shares as support for new purchases. So instead of paying everything in cash, you can free up some money without selling the shares you want to keep. In short, it helps investors make their capital work harder without changing how they invest.
Oh, how does that work?
Let's say you want to buy some shares for $10,000. You deposit $5,000 and the broker lends you the other $5,000. When share price goes up by 10%, you earn the 10% minus the interest on the amount borrowed.
How is this beneficial for investors?
Investors today are not just looking for access to markets. Our focus is on helping clients stay invested, remain flexible, and make more informed investment decisions.
Is there a minimum amount to invest?
No, there actually isn't. A prudent way is to start with a small portion of your portfolio at conservative margin levels, so you can understand how margin works and how market movements affect your account before increasing exposure.
Share margin trading is a tool designed to give investors more flexibility and opportunity in the markets. Trade now on the Phillip Nova app.
Yep. Thanks for spending the time to watch the video. So as mentioned, shares financing, it gives everyone the flexibility where you can actually unlock additional liquidity without exiting your existing positions. And for those of you who have high conviction trade ideas that you want to take on, right, it actually also provides you leverage of up to 3.3 times with transparent costing of 4.5% per annum on USD and SGD financing. And of course, for those of you who are maybe dividend investors who aim to capture the yield, shares financing can also come in as a yield carry instrument, a yield carry tool, where you can actually borrow at 4.5% and invest in equities which yield a higher dividend or interest rate payout than the 4.5%. And that spread that you capture is an additional return in your pockets. Yep. So these are the commissions that we have for stocks and ETFs globally, where you can access 6 major markets within one single platform. For US shares, the commission is starts from 0.01% with a minimum of $3.88. And then for Singapore, it's at 0.08% without any minimum. The rest of the commissions are as per what's shown on the table here. For those of you who are interested in Japan market, right, we are currently offering no charges for live market data. So that's something that might interest you, with Japan hitting all-time highs recently also. Yeah. And just a very quick look at our Nova trading platform. So this platform is actually really easy to use. For those of you who have not tried before or hasn't seen our platform before, for depositing funds, it's just a very quick 2 steps where you can just deposit via a PayNow and the money will go into your account almost instantly, right? And then if let's say you want to do any currency conversion, like I mentioned just now, the rates are really very tight, very competitive. So this was the snapshot that we took just on 16 June. As you can see on Yahoo Finance, it's showing around 1.2831, and then we are doing it at 1.2847. So that's actually a very competitive rate when it comes to currency conversion. And then of course, on our platform, if you were to execute a trade, you could just look for the counter or the stock in your watch list, and then you can just place an order from there. The execution is just a very simple 2 to 3 steps for you to hit your market order or to queue your limit orders. Yeah. Then on top of this, our Nova app actually allows you to connect to it via TradingView. So for those of you who love TradingView as a tool, we are also there as a broker that you can connect to. It's a very simple step. Just click on the trade button, and then you can search for Nova and then connect to us by logging into your platform. So for those of you who are new to TradingView or hasn't seen TradingView before, it's actually a very good trading tool. It's a website, or you can download the program. There's many tools inside that can help you guide your trading or investment decisions. There are things like a stock heat map that gives you a very good view of everything that's happening in the market. You can select between different index or different markets across the world, or you can select between different sectors. And then there's also the stock screener. You could use it to screen for your stocks or for ETFs. It's all within TradingView. And then from there on, you can add in your parameters to aid your decision making. Yep. So that's all from my end. Now I'll pass the time on to Phillip, who will be sharing with everyone on his insights and experience that he has gained over his years of trading the market, of really sharing the product. Yeah. So over to you, Phillip.
Thank you, Sean. Thank you. All right. Hi, everyone. Thank you for your time for being here. Okay. Again, I would like to say thank you to Phillip Nova for inviting me for these webinars. And again, my name is Caleb Gan, award-winning stockbrokers and traders. Before I begin, maybe can I ask, which part of the Singapore, are you from? If you are from, Pasir Ris, okay, can you type in the chat room? Let me see, all right? And if you are in, north or east, all right, can you type in the chat room? So it's, let's begin with these conversations. And I also want to know which market are you currently trading right now? Like, for example, I believe, some of you are trading in US markets. What about Hong Kong's and Singapore? Can you type in the, in the chat room? All right. Oh, by the way, can they ask the question, right? Or can they type? Okay. Okay, let me begin. All right. There's no answer from there. No worry. So just relax, okay? And now what I want to cover today, right, is about US market, particularly how you start, okay, as a beginners. And this webinar also benefit, for people who, has been investing in the market for quite some time. So I just want to share with you how I do things, and later on, if I have more time, I'll show you my own software. Okay, what software am I using? All right, but of course, the trading platform, we are still using the Phillip Nova trading platform. So I also one of the co-founder. Okay, but before that, please allow me to share with you a little bit about myself, because I believe you don't want to talk with the stranger like me for another 2 hours. Am I correct? So give me 5 minutes to share with you my background. So I'm one of the co-founder of this NDU system. So NDU system was created many years ago. So the purpose is that I want to use the software to screen out the potential stocks. And during that time, we can't find a good potential stock. Reason is because that we usually we depends on the news, all right, and then the radios. So I have an IT background, so that's why I know how to do some programming. So with that, it helped me to screen out some potential stock, and then I share with my client during that time. So with that, actually, we start to teach people how to use the software to screen the stock by themselves. And that was many years back. And currently, I also coaching some traders, for US, Hong Kong, and what we call that Singapore market as well. So for the past 16 years, it's not easy because stock markets, I think is dynamic, keep changing. All right, when the market is good, everyone is happy. When market is bad, I think some people, the money got stuck in the stock market, which is quite painful. All right, but what I mean here is that no matter how bad the market is, okay, as a representative, I always there for my client, and I would share with them what is my suggestions and what is the strategy. The most important thing, particularly when the market is not good, or when the market is selling down. And of course, when the market is good, what should we do? Okay, most of the people, they do not know how to sell. All right, they keep holding on to the stocks. Initially, they make money, but subsequently, why a winning trade can become a losing trade? So that means they don't have a proper strategy to trade the market. So they apply the strategy, by buying a property, buy and hold strategy. That could be applied on the property, but it might not be necessary, workable for a stock market. So 16 years, and I do enjoy my life, okay, because in stock market, it actually changed my life. Reason is because that it allowed me to, met a lot of different background of friends, and subsequently they become my client as well. So stock market also helped me to make a lot of money. So with the profit that I make from the stocks, I can spend for traveling, for my expenses. So the feeling is a difference, because when you spend the stock profit money for traveling as compared to using your own pocket money, that is totally different. All right. So that's why I am very consistent in a strategy. All right, because discipline is very crucial in stock tradings, and you got to be at a very high level, all right, to make a very profitable trades. So that what I have been doing. So today you are in the right place. So um, of course I would like to share with you how I do it. And again, standard, whatever thing that I share with you is just my view. There's no right view or wrong view. And later, if I talk about any stocks, all right, it's not for you to buy or sell. So it's just for education purposes, all right? And okay, market reality today, all right? So what is happening, okay? Like what Sean has been mentioning, market is so volatile, all right? And it's very unpredictable with Donald Trump. So many investors are actually struggling, okay, with the current market situations. So the question that most of the investor ask, okay, usually is what stock to buy. And when they got the stocks, they will ask the next questions, when to buy. All right. So after buying already, they will ask, hey, what is the target price, when to sell. So a lot of people, particularly the retail investor, so they have this problem. So this problem, for me, I think it can be solved, all right? Because once you know the method, once you know the way, all right, um, you have the strategy, you know what stock to buy, you know what stock to get in, and you know when to buy and when to sell using technical analysis. And I know that some people who are using fundamentals analysis, nothing wrong with that, all right? So, in stock market, there are two school, okay, namely fundamental analysis, and the other one is a technical analysis. So if you ask me, I use technical analysis most of the time. And once you are in the positions, you need to manage the risk, because we do not know how the market behave, all right? So that's why you need to set a stop loss. You need to control the risk, okay? And the emotional part is the most difficult part for us to control. Reason is because that we are, just a normal human being, all right? So when the stock price crash down and we are in that situation, of course, our emotion will be affected. So once your emotion is affected, you will make a wrong decision. So that's why if you can control your risk with a proper strategy, you can, okay, control your emotions. So with that, right, the next thing I want to share with you is that US market is actually driven by, many things. The first thing is interest rate. I think yesterday was the first, Fed chairman uh, making a conference. So they have decided to maintain the interest rate. All right. So last night market was volatile. Okay. Nasdaq was dropping around 300 plus point. But tonight, some of the stocks like AI related stocks, pre-market show that the price was green color. All right. So that means the price opened at, at a gap up price. So like what I mentioned, all these things are unpredictable, all right? So if you depend on the news to trade, it is very difficult for you to, to make a decision. It's like last night down, okay? And then today the price up. So you might have difficulty to enter a stocks. So that's why you need to have a proper strategy to identify when is the right time to buy, when is the right time to exit. That is very important. Inflation data. So all these informations actually related to the US. So inflations, I think if you read some of the news, US inflations is quite stubborn, okay? So that's why last few weeks, market was so volatile is because of the CPI index, all right? And geopolitical tensions, okay? So all these actually affect the US stock market. And if you look at the geopolitical tensions, I believe every years, okay, almost every years, okay, there is a war. But if you look at the fact, the S&P 500 keep moving up. So what does that mean? Okay, what does that mean? All right. Now, based on the fact, S&P 500s, okay, for the past 30 years, it has gone up most of the time, okay, more than 80% most of the time. S&P 500 has gone up for the past 30 years. Only 20% was down. Now, based on this fact, isn't that investors supposed to make money? But why, at the end of the day, if you look at the fact again, why most of the retail investors are losing money? All right. The answer is very simple, because of emotion. Okay, because of emotion, and they read too much news already. All right. So the news is actually, was published by some party, all right, to scare off the retail investor. That's always the case. So that's why most of the retail investor is losing money, is because they rely on the news too much. But for me as a traders, I focus on the chart, I focus on the process. Okay. So what do I mean by process? Some of you might ask. The process is very simple. So like, for example, every day, what I would do. So I will screen out the stocks, potential stock, narrow down the potential stock. I mean, in US markets, we have more than 3,000 stocks. So how are you going to choose the right one? So that's the number one problem. So secondly, okay, once you choose the right stocks, you must know when to get in. And then once you got in already, you need to manage the risk. So all these are the steps and the process that I focus. Okay. So that means my objective is all green portfolio. So you listen carefully. So all green portfolio is my objective, not to make money in the stock market. That is the normal people, objective. All right. So at the end of the day, if you manage to follow your process, I believe some of you have your own strategy. If your strategy work right, then you just continue with your strategy. So the next thing I'm going to share with you is that how to identify market trend. Okay. Now, I believe some of you heard about these words like, the trend is your friend. So make sure you follow the trend. Now, if you ask me, I actually I do follow trend, all right? So that is why when US market was in the bull run, I think it started 3 years ago with the mega cap, all right? So if you follow the trend, you should be making good profit for a mega cap. But the fund does flow into a different sector. So if you compare with 3 years ago and this year, the stock that they are moving up is no longer mega cap anymore. So that's why you need to identify the trend. So the mega cap trend has ended. If you look at Meta, the stock chart was so volatile. Microsoft is downtrend. So if you are able to identify the trend properly, you should be able to exit the stocks before the price crash down further and move on to another stocks. And therefore, in stock markets, there are three types of the trend. Okay, there are three types of the trend. Number one, okay, uptrend. Number two, sideways. Number three, downtrend. All right. So uptrend, of course, is the easier for us to make money. Sideways, market is volatile. Okay. If you know how to trade within the range, support level and the resistance level, you could make money as well. For downtrend, most of the retail investor, all right, will not doing well. But for professional traders, they know how to short the market, like for example, using CFD, all right, Phillip Nova CFD, okay? So it depends on the market situations and you apply the strategy that suit your need. That is important. So I do use price actions. So what is price actions? Actually, price actions is to study the behavior of the stock chart. Now, do remember, a good company does not mean a good stocks. Example, Microsoft is a good company, but it's not a good stock right now, I mean. Meta is a good company, but it's not a good stock right now, okay? So, Palantir is a good stock as well, I believe, but it's not a good, it's a good company, but it's not a good chart. So therefore, you need to differentiate between a good company and a good stocks. Now you have to understand every one of us have a limited money. We are not like Warren Buffett. Warren Buffett had a lot of money. So that means what? That means Warren Buffett can, utilize his cash to buy a particular stocks and then wait because he have too much money. He can wait. But for us, once our stock is stuck, most of our money could be stuck already. So that's why we don't want that to happen. And with that, right, we need to learn, how to get in and how to get out. Stop loss is also important. How do you manage the risk? And with that, you need to know how to analyze the stock chart. And of course, one of the professional traders, how they do is that they study the price actions of the stock chart. So basically, when you study the price action of the stock chart, is to try to find out what is the future directions of a particular stocks. Okay, so basically, another way is just to forecast the market behavior without the indicator. So indicator is lagging because indicator require a certain number of data to generate the signal. So by the time the signal already appear, it could be too late. So that's why price action come in to help you to participate into a potential stock much more earlier as compared to indicator. So if you look at this chart, all right, initially it was downtrend, okay, and then it was volatile. So that's why there is a pattern show that shoulder on the left, and then there is a head, and then followed by right hand side another shoulder. So we look at the candlesticks pattern, support and the resistance level, the trend, and then followed by a market structure. A bit complicated, but once you have mastered the price action analysis, it should be easier. Trend line and channel. So how to identify the trend? If you look at left hand side, all right, ascending channel, so that means the price is sloping upwards, indicating that the price is moving up. In technical term, we call it the stock price chart is moving at higher high. So when the stock is at a higher high, we want to apply the swing trade strategy. So that means when the price pullback touches the support level of the blue color line, that could be a potential entry point with a stop loss. So we need to manage the risk as well, because nothing is 100%. So when the price has crashed down or break below the trend line, then of course we will exit the positions. So that is what I call follow trend, okay, or follow trend strategy until the trend has ended. The next thing is, if the price begin to crash down or break below the trend line, it will enter the down channel. So for down channel, like what I explained to you, most of the retail investors do not know how to short sell, all right? But for professional trader, we do short sell using CFD, Phillip Nova's CFD platform. So a lot of retail investor, what they do when the market is crashing down, most of them, they will just stay sideways, or they will be stuck in the stocks. So for professional traders, usually we will, exit the position when the market is crashing down, all right? And we will participate in the short selling strategy. So that means we do make money when the market is, uptrend. We do make money when the market is downtrend. But we do manage our risks. Like what I mentioned, nothing is 100%. It's all based on the probabilities, all right? So descending channel is just like down channels, and then followed by the sideways, which I explained to you. Now, why some professional traders like sideways is because the entry price and the exit price are predictable. Example, how do you get in? When you look at the sideways stocks, you get in when the price near the support level, and you exit or you take profit when the price reach the resistance. So what does that mean? That means the entry price is predictable because the price is near the support level, and the profit targets, it also predictable because it near the resistance. So some professional traders, they are looking for this type of the chart because the profit target is predictable. So it depends on what type of the strategy that you want to apply. It all depends on your needs, okay? And then from there, you decide you want to buy when the stock is uptrend, or you want to short when the price is downtrend, or you want to trade the sideways when the price move up and down. So all these come with strategy. And how to identify the trend using moving average. Now, like what I mentioned, indicator, moving average, they are lagging because they need to have data before a moving average can be formed. So it might be too late sometime, but however, it is quite useful for a beginners. Quite useful for beginners to identify what is the trend of the stocks. So if you look at the chart on the left hand side, initially it was uptrend. So usually when the price is uptrend, the moving average will flow with the candlestick at the bottom of the candlesticks. So when the stock chart has ended the uptrend, usually they will break below the trend line. So when they break below the trend line, what you see is that the moving average will be formed at the above of the candlesticks. So this shows that the price begin to falling, and you could apply the short sell strategy if the price maintain at below the moving average. So there are different type of the parameter of moving average, although I didn't indicate on my slide, but some of the standards parameter that I am using, like 10-day moving average, 20-day, 50-day, 100-day, and 200-day moving average. So it's catered for different type of the stocks. Now you got to understand every stock have their own characteristics. It's like, children's, okay? They are unique. And you must know, you must understand them, okay, in order to give them the correct advice. Same for stocks. Every stocks behave differently. Reason is because it was traded by different market maker. So that's why each trader have unique strategy. So how are you going to know what kind of strategy that they are using? All right, by looking at the chart, of course, you won't be able to know. But if you are able, okay, to catch where the potentials, price entry, and the fund flow, also called the strong sector, the leader of the stocks. These are, one of the indicator whereby, the fund managers or the market maker, that they are participating in this kind of stocks. And if you look at the chart, right, higher high and higher low. So this show that Apple during that time, it was quite volatile, but you could make money if you apply the correct strategy. So how do you trade this type of stocks? How do you trade? So usually you wait for the pullback, and if you know how to draw the trend line, which is the what we call that light blue color, and look for a bullish confirmations, a rebound or strong candle or bullish candles, and you enter the positions, followed by placing the stop loss just below the higher low. Now for stop loss is actually, there are few method. Some prefer percentage, like for example 3% stop loss. Some prefer placing the stop loss just below the last higher low. So it all depends on individual strategy. So when the stock price has gone up, usually I don't chase. I prefer to wait for pullback. But if you look at the recent market, like Micron, Intel, these are the stock that keep moving up. They don't give chance for you to enter. So that means they don't really pull back and they keep moving up. So this is where the US market, what we call a bull market. So usually when market is in the bull market, they don't give you a chance to enter because they don't pull back. Even though they pull back, they just pull back a little bit. So that is another way of trading this kind of the situations. But if you ask me, most of the time, the stock will pull back. So when the stock pull back, we just wait for the setup. So when there's a setup, then we just enter, near the support level, so that it will give us higher probability of winning trade. So common mistake in the trend identifications, all right? So I believe most of the people, particularly the retail investor, they're trading against the trend. So what does that mean? That means probably what I see, all right, the money is already in. So that means they are already in this stock already, all right? So their objective is to make money, but most of the time you think that the price will go up, right? The fact is that, most of the time it will come down. So when that situation happen, okay, what normally, people will do is that they will average down. Okay, so that means they keep buying when the price keep going down. So the reason is very simple. They want to, get out the trade at the break-even price. So that means what? That means they buy, when the stock keep going down. But what happened is that if you buy the lousy stock, and again, most of the people, they don't aware or they do not know the stock whether that they are buying is the lousy one or not. Because when you are losing money, you are emotional affected. So you just don't care about whether this stock is a good stock or not, whether this is a good company or not. All right. So you just keep buying, average down. So that is the huge mistake. That's a huge mistake. We only add position when the stock is uptrend. We don't add position when the stock is downtrend. So do you realize that most of the people become so daring when the stock that they have is downtrend, and then they keep buying? When the stock price keep going down, they keep adding position. But when the stock is keep moving up, what happened? They keep selling because they are scared. They worry the stock price will crash down. But a strong trend, a bull market, usually the price will keep moving up. So that's why I say, all right, when you trade the stock market using your own opinions, you cannot make money, because stock market don't care about your opinions. Number two, entering too earlier before the confirmations. All right, so that means FOMO. Okay, so that means stock like if you look at some of the stock like Micron, for example, keep moving up. So I believe many retail investors try their best to get into the stocks when the price trading at a high price. So when you buy when the price is at the peak, then of course it will pull back. So when the price pull back, then you are worried. So when you are worried, what happened? You sell. So when you sell, the price begin to recover. So that's always happens. That's always happen for a retail investor. And number three is that misinterpreting sideways market as a trend. Example, stock like Meta, okay? There's no trend for Meta anymore, okay? Let me show you what do I mean by that. All right, so if you look at Meta, right, Meta no longer have have any trend. The stock price is so volatile, okay? So they thought that Meta, Meta is a good company, all right, but like what I mentioned, a good company does not mean a good stocks. So that means they thought that they buy, for example, they bought at the price of $600. They hope that the price will increase. Now, it does increase, okay, for a short period of time, but after that, they came down again. So what does that mean? That means if you are the traders, of course, you don't want this to happen unless you are telling me you are, fundamentals investor, you want to buy and hold. That is different story, okay? That's different story. So that means you have a lot of cash, don't know where to park, okay? Put in the saving account, no interest. You feel comfortable with Meta because every day you are using Facebook, all right, WhatsApp, Instagram. So you are comfortable with Meta, then you can accumulate using your cash, all right? But for me, as a trader, I don't want my money to be stuck. So everyone is unique depending on on individual needs, all right? And then from there, you decide what kind of strategy that you want to apply, what kind of stock that you want to trade. You get what I mean? So yeah, so a lot of people thought that a sideways stock as a trend. So overcomplicating the what we call that, the chart with too many indicators. So example, if you look at this chart, right, I don't know how you could read the chart. It's too complicated, and you might confuse yourself by looking at the chart, and then at the end you could make mistakes, all right, because indicator A asks you to buy, indicator B asks you to wait, indicator C asks you to sell. So at the end of the day, you become so confusing, and then what happened? You make mistake. So try not to complicate your stock chart, all right? The simplest, the better. So simple rules to remember. So if the trend is not clear, all right, don't trade. So don't fight the market, follow the directions and let the probability work in your favor, which is true. So when to enter and when to exit the trade, all right? So this is my, common strategy, all right? You only enter when the trend is clear. So that means when you want to buy the stocks, of course, you want to buy the uptrend stocks that is keep moving up. And of course, we wait for the price to pull back. So avoid chasing the price. What does that mean? So when the price has already gone up 10 to 20% or 30%, we don't chase. So we wait for the pullback. So second thing is that enter only when the price show confirmations, just like what I explained, okay? Price pullback touches the support level with bullish candlesticks. That is the potential setup. So we don't enter based on emotion. We don't enter based on FOMO, all right? So confirmations can be, included a breakout with strength, all right? Pullback to key level, strong momentum candlesticks. Now, if you ask me these three type of the confirmations, which one do I prefer? I think you get me, which I already mentioned. Pullback is my favorite confirmations. And the second one is the strong momentum candlesticks, because some of the stocks like Microns, Intel, WDC, for example, all right, they don't pull back. Okay, when they don't pull back, how do you trade? Now, if you look at this stock like WDC, so they don't really pull back. Okay, even though they pull back, they just pull back a little bit. All right. So when they don't pull back, okay, usually what you do is that you enter when the price is breaking out from the resistance. Like for example, during that time when price was trading at $310, okay, hit the resistance and then break out from the resistance. So that's where you enter after the breakout. All right. So now this type of stocks, right, only occur when the market is in the bull run. So US, in fact, is in the bull run. So that's why WDC is one of my favorite stocks. Okay. And just want to share with you what do I mean by a strong momentum candle and breakout with a strength. Okay. And how do you enter? So two types. Okay. Exit strategy. Now, I believe buying is not difficult, because most of the time I notice when your account have money, you know how to press the buy button. Okay. But for selling is the most difficult. Because why? Because everyone want to make money. So if the trade is not profitable, most of the people, they don't want to exit. So that's why they keep holding on to a losing stocks. And with that, right, you need to improve on this. Because why? Because once your money is stuck in the stocks, a lousy stocks, it is very difficult for you to make back the money. Because if you look at the entire market, US particularly, there are many opportunity. Different stocks has a very high potentials. So if your stock or if your portfolio is still not making money, there must be something wrong with your strategy. All right, then you must find a way, all right, to turn your portfolio from red color to green color. So that means what I call, I teach in my class, we call it how to reset your portfolio from a bad stocks to a good stocks. All right, so that can be done, but you cannot forever holding on to a lousy stock, okay? Because if you are trying to hope for the stock to rebound, most likely it will not rebound. So I would rather, decide my strategy based on rules based. That means if the rules tell me to sell, I sell. If the rules tell me to buy, I buy. All right. So there are two types, okay, for you to take profit, lock in the gain. And second thing is a stop loss, which is very crucial to protect your capitals, to protect your profit. So many traders, like what I mentioned, or investors, or retail investor, focus only on entry. They keep asking, hey Caleb, what is the good stock? What is the good stock? All right. Even though I give them a stocks, potential stocks, they do not know how to sell. Then what happened? All right. So that's why at the end of the day, you need to up your level, or you need to improve on one of the trading strategy, how to exit your position. Now I want you to look back, okay, maybe after these sessions, you look at your portfolio. I believe some of you are still holding on to a lousy stock or losing trade. I want you to look back and try to imagine what was happening. Initially was profitable, but how come now your stock is losing money? You look back, why? Is it because you didn't sell, or is it because you do not know how to sell, or is it because you apply the strategy like property, buy and hold? That would depend on what stock you are buying. If you are buying Apple, yeah, you can, if you want to hold. But what if you are buying some, mid cap stocks or small cap stocks? Okay. So once you buy the wrong one, of course, you will see a red portfolio. So the stop loss is actually protect your capitals, and take profit is to ensure you don't give back the gain to the stock markets. So remember, you must exit, with a clear plan. All right. So emotions take over. Don't let the emotion take over. So make the decision, all right, based on the rules base. So example, like initially, Palantir, all right, was the best stock last 2 years. Many investors were making a good profit, but if you look at the price right now, some are sitting at the loss because they did not exit. They thought that they want to hold. No doubt is quite a good company, all right, but the market does rotate. The fund does rotate to a different sector. So if you are holding on to this stock, I have seen some, investor holding on to a, quite a heavy position for these stocks because they believe in the story. And then once they start, they don't have opportunity, right, to participate in another stocks. So when this kind of thing happen, all right, you don't feel good, okay, looking at your friend making money from WDC stock, Microns, etc., and you are holding on to these not moving stocks. So it's quite painful, all right, I can understand. And basic risk of management, okay, so your goal is to control losses because we cannot control the market, right? Okay, I think most of you agree. So we can only control our trade, okay, which is the losses. Set stop loss, okay, and make sure you stay consistent. That means once you have decided to exit at this specific price, make sure you exit or you set a stop loss. And what I have seen, some of the people, they have decided to exit at specific price, but end up they don't sell and they become a long-term investor. So this thing, happen. So survive long enough to win. Now in stock trading, right, it's not about how much you make, okay? It's about how long you can survive. Because the longer that you can survive, right, you will be able to participate in a very bull run market, and that is when you will make back all your money that you have lost. You get what I mean? So that's why you must learn how to survive, okay, particularly when you are very new. So protect your capital first and then profit come a second. That means we focus on process. All right. So common risk management, I believe many people or majority of the investor, they don't set stop loss. And risking too much, that means become emotional. They want to revenge on the losing trade because it was losing too much already. So that's why they over trade. And number three, like what I mentioned, revenge the trades and then keep moving the stop loss. That means they keep adjusting the stop loss. Supposingly, the stop loss is at 99 cents. All right. So, human being, all right, normal human being, they keep adjusting the stop loss, okay, lower, and then the stop loss never hit. So don't let this thing happen, right? Because risk management is very crucial. We're talking about how you protect your money, how you protect your profits, all right? Without money, of course, you have no chance to make back the money that you have lost. So emotional control through the risk management, all right? So proper risk management help you stay calm during the trades, avoid revenge the tradings, avoid panic selling. Now, if you look at the what we call that, the US markets for the past 2 years, there was two what we call that, two things happen. Like the first one was tariff, and the second one was the war between Iran and US. So if the issue is not about the stock company, if the company is still solid, don't you think you should hold the position, not panic selling? So many retail investors, they become emotional by reading the news too much, I think, all right? So they sold the good stocks, and then the worst, they never buy back, right? Because thinking that the war, will drag on. I think that was the news mentions, okay? The war could drag, and then the inflation could spike up, all right? Interest rate could spike up, all right? So all these news are, are very subjective. And if you look at today's stocks, they keep moving up higher, all right? So which one you want to choose? You want to choose reading the news, or you want to choose to read the stock chart? So for me, I choose to read the chart and to make the decision based on my price action strategy. So growth mindsets, thinking in the long-term series of the trades. That means what? That means when there is a potential setup, all right, you are good to go. Although the indices showing not a good sign, you got to remember some of the stocks, right, are very strong. If you look at recent markets, when the indices was pulled back, there are certain stocks keep moving up. So what does that mean? That means we need to have a long-term view on certain sector stocks. instead of a very short-term view for a sector. So with that, right, you could have a potential stock, in your watch list when market is not good. When I say indices is, volatile, if you have a very strong stock in your watch list, you could make money. All right. So second thing is that I think most of you agree a losses is part of the game in the stock market. If you tell me you want 100% profitables, then my suggestion to you is that put your money in the fixed D, all right, or put your money in a saving account. But like what I mentioned, yeah, so losing money is part of the game in the stock market. So you need to manage the risk. And consistency means that win big, lose more. Win big, lose more. So when you win big and lose more, even though your winning rate is less than 50%, your total portfolio still could make money. Win big, lose small. All right. And common mistakes to avoid in the volatile markets. So number one, trading without a clear plan. That means enter trade without defined entry. Most of the people, they don't have a proper trading plan. So what do I mean by proper trading plan? So that means by looking at the chart, what is the entry price, exit price, stop loss, and the target price. So these are the trading plan that you need to apply whenever you want to buy a stocks. All right. And second is over trading, too many positions, right? And taking too many trades in a short time. Now, I have, experienced some of, my friends and some of my clients, they are holding more than 50 stocks. So I just curious, I just asked them, how do you handle that? All right. And then at the end of the day, they could not answer me. Okay. So for me, as a traders, I don't hold more than 10 stocks. Okay. Usually I hold less than 10 stocks, which is manageable for me. All right. And number three, letting emotions drive the decisions. That is where the emotional part will affect your decision making. So that's why some people have this problem, like every time when the market drop, they quickly sell their good stocks, and then the next day the stock rebound. So if you don't have a proper strategy, if you don't know how to look at the stock chart, if you don't know how to catch the right stocks, then if you let the emotional part overtake your decisions, then it is very difficult for you to make money in a stock market. And ignoring the risk, which is very crucial, no stop loss. Let me ask you, how many of you have, set a stop loss? I think most of you don't have. So if you're risking too much and trade too much, all right, over tradings, and then when you are losing too much, it is unlikely for you to exit the position because it is too painful for you to sell if your losses is too huge. So that means what? That means you need to make a quick decision, or the simple way, make sure you find a platform like Phillip Nova, which have the feature called stop loss. So you can set the stop loss to protect your capitals, to protect your profits. And number five, chasing the market like FOMO. Okay, so that means like for example, the gold and the silver. If you still remember, last year October was the peak, and even though when the price was at the peak, the retail investors still rush in to buy. That was gold and silver. So if you look at the price right now, gold and silver, what happened? All right. So for example, gold. So the gold has crashed down. This is silver gold ETF crashed down 26%. So if you FOMO, so that means you could have entered near the peak, which is $500. And then, like what I mentioned, if you don't set stop loss, what happened? If you will still holding on to this, gold ETF, even though silver, right, SLV. So silver, okay, during the peak was 110. So since then, what happened? The price crashed down 47%, all right, 47%. So that was a lot, okay? So you don't want that happen to you, right? Okay, and that's why, you need to have your own proper strategy. So in the volatile market, so discipline matter, all right? I know it's not easy, but if you look at the market, it always repeat itself. It always repeat itself. The pattern also the same. The stock chart. So if you can master how to read the stock chart, you should be able to make a good, should be able to become a good traders. All right. So the 5 simple trading frameworks that everyone's must have if we want to become a better traders. Identify the trend, whether the stock price is uptrend or downtrend or sideways, because you need to know, you buy only when the stock price is uptrend, sell when the price is downtrend, and wait for the confirmation, or we call it wait for the setup. When the price pullback touches the support level with a bullish candlestick, only then you enter the position with your confirmations. And of course, set the stop loss as well as plan for your target price. So number 5, repeat the step. Okay, repeat the step. So these are the 5 simple trading framework that I apply each time when I want to enter a trade. All right. So key takeaway, trading is a skill, not a luck. Okay, focus on the process. Okay, focus on the process. So that means, what is your process? All right. So what is your process? So my process is screen out the potential stocks. All right. Enter when there is a trend. Okay, wait for the pullback. When there's a setup, after that, set a stop loss, and the rest leave it to the market to decide. So quick reality check. All right, so what you are learning today is just a tip of the iceberg. Okay, maybe 10% of the what's inside my full course. Okay, so if you want to learn more, all right, how I do the trade, okay, what is my strategy, I would like to invite you, all right, to my 10x strategy course that I has been teaching. Give me 10 minutes or 15 minutes to share with you what you will learn and what you will get. So this is my personal course. It is a 26-week live coaching. All right, 26 week. You hear me correctly, 26 week. Now in outside, right, I don't see any trainer teach you for 26 week. No, none of them. So 26 week, what you will learn and what you will get. So number 1 is a mentorship. So that means a step-by-step from beginners to become a better traders. So that means if you trade by yourself, it's a very boring. Reason is because that you don't have someone to share with. Now, for us, we work in a group. We have a communities to share the idea, to share the stocks ideas. So that's why you need to have a proper, what we call that, channel, and of course, mentorship to guide you along the way. Because trading is a long-term journey, you need to have a group, you need to have a mentor to support you during your trading journey. And the trading community play a very important rules. Reason is because that for me, I admit I have a limited knowledge and experience as well, because stock market is dynamic. So that's why you need to leverage on someone who have the experience as well in the stock market. So example, okay, now when we do trading, sometimes we will overlook on the earning reports. So if you buy these stocks, okay, and then the next day the earning is coming out, this is very dangerous. What if the earning is not good? The price could get down 10 to 20%. So someone in the trading community could, highlight to us, or maybe just, share with us, this stock that we are trading, tomorrow the earnings is coming out, just be careful. All right. So that is what I call a trading communities, that we work together, we share the idea, and then we can ask the questions and learn. And the strategy that I'm using is a price action strategy called trend following, and then followed by chart pattern. I look at the candlestick and support level and the resistance level, and of course come with a risk management. So the case study also important. Okay, why 26 week? You have to understand stock market is dynamic. Every time, they keep changing. With that, right, I'll be able to share with you what is happening based on the current situations, and what strategy should we apply for these situations. Like for example, last year we have a tariff, issue, uh, and the stock market crashed down. During that time, a lot of people was panic, keep selling their stocks. But for us, we are very calm. We are busy looking for potential stocks, and we accumulate the stock just when the price begin to recover. So that's how we work together in our trading communities. So the case study is based on the current market situations. That is how you learn, as compared to you attended the 2-day course. They just, teach you the theory. They are unable to show you what was happening recently. All right. But of course, they could show you the previous case study. But like what I mentioned, stock is dynamic, and you cannot just, focus on 2-day class. That's why 26-week class work for most of the investor and traders. Tools, all right, the powerful tools. Later I will share with you. I do trade CFD because Phillip Nova do have a CFD, and you need to have a what we call that CFD calculators tools. Later I'm going to show you how I use it, and it will be very what we call that useful, because it will help you to calculate what is the risk reward ratio, what is the stop loss price, and what is the target price, all at one page, so that you'll be able to know when you want to decide to enter this trade with CFD. You know what is the risk, you know what is the profit targets, and with that you can make your decision more faster as compared to the people who don't have these tools. Bonus, okay, I have my watch list. Personally, I pick the stocks by myself. I have my screeners for US market watch list. And this watch list, right, I spend a lot of time analyze the stocks. So it has a very high potentials. And I believe the stock is unique. Some of the stock you might not see before, but it has a potential upside. So I could share with you if you have signed up for my class. So for VIP membership, okay, exclusive online access to the membership site. So what does that mean? That means I do record the video during the live class, and then I will upload to the membership site. For people who are not able to attend the live class, they can watch the replay. So what you will get, okay, in this 26-week coaching, online coaching, every Tuesday, 7:30 p.m. to 9 p.m. Focus on US market and sometime Hong Kong market. So like for example, right now, US is the bull market. So we will focus most of the time on US market. Hong Kong market is not doing well, so that's why we spend less time, all right, for Hong Kong market. Trading strategy, what am I using? What strategy that I use? Most of the time is price action strategy, is to help me to identify the entry price and the exit price. Most importantly, all right, I will emphasize most of the time when to sell and when to exit the positions. So practical skills and knowledge sharing, all right. So I will be showing you how to enter and how to exit using my own method. And this is the watch list, all right. So every Tuesday, I will show you my US stock watch list with different categories. Some of the stock can be traded using CFD. I do trade 2-time ETF. That means if you are looking for multiply your profits, then you need to look for a different tools. And in this class, I will share with you how I do it. So I categorize the stock in high risk, mid-term risk, and then very high risk stocks. So I do have a ETF, 3-time bull ETF. All right. So all these, some of them you might not see before, and I believe you will learn something new in my class. So this is Hong Kong stocks for growth, ETF, 2-time bull, high risk, and trading communities. I will invite you into the Telegram group, and this Telegram group is to support you. You can ask questions, all right, and I will answer your questions. So example, now beside asking question, I do share some potential trade. Like for example, previously I was sharing this stock called Broadcom. The price was trading at around 248. All right. So potential CFD trade setup idea. And after that, what happened? Because we are using a trend following strategy. So after buying, we hold for a certain period, and the price has gone up to $372, which is 49%. Okay. That was amazing. Okay. If you are using CFD, of course, CFD could help you to multiply your profit. Okay. So that means from normal trade, if you could make 49% using cash only, but if you know how to use CFD, your 49% could become 100%. All right, because CFD is a leverage of products. All right, and again, leverage product might not be suitable for everyone, so that's why you are here to learn, okay, and manage the risk. VIP membership site, which I explained just now, every sessions will be recorded and then upload to a membership site, and you will get to access to this membership site through your mobile phone, through your website. As long as you have the laptop and internet, you can access to rewatch the video and to relearn the video. So show you how does it look like. Okay, so that means you will have the access for this membership site to watch all the video. All right, how to onboard, okay, and how to getting started with CFD, ETF tradings, ebooks. All right, Hong Kong stock market for beginners, beginner's guide for Hong Kong stocks, powerful of chart patterns, and advanced moving average trading strategy. All right, so it consists of 2 languages, okay, Mandarin and English. All right, but most of the time I will speak in English, and then my colleague will put in the subtitle for Chinese. All right, so this is a weekly sessions. All right, so you learn different thing every week. So that means I believe stock market is dynamic, you cannot just learn the theory, all right? So every session there is a value. Every sessions we talk about the current situations and we discuss what idea and what strategy to apply for a special case like the Iran and the US war. So we can see that every topics you will learn new thing. So if you sign up for my class, you have access to all these video, more than 100 videos for you to relearn how I look at the market, how I trade the stocks, and what are the strategy am I using. So all this video you can access provided you sign up for my class. So this is a CFD calculator, all right, worth $188. I will give it for you. And how does it work? Okay, let me show you. Example, all right, I've been trading CFD for many years. So that means initially I use it for my own use, all right? And after that, of course, my student asked, hey, can they own the calculators or not? So that's why I'm teaching. And example, if you look at CFD can go for long position and short position as well. So I have this calculator for long and short positions. So if you are looking for a long positions, right? So let's say, for example, I show you some of the stock like Zenny stock, WDC, let's say, for example, right? So let's say, for example, WDC, all right? If you know how to draw the trend line, okay. So this is a support level. This is a support level, and this is the support level, all right? So we take the recent one, all right? If you know how to read the chart, like what I mentioned, it does show the potential entry, okay, recently, in fact, all right? So this is the potentials entry, right, that you can, can be considered as a setup. So this also, the price does break above the trend line with a bullish candlestick, all right? So when this thing happen, okay, it can be considered a setup, all right? So let's say, for example, so the entry price is based on the trend line break above the trend line support level, and the entry price is $520. So you can just key in your entry price, $520, and then depending on how many shares you want to buy, all right? For example, a 50 share, okay? And then what is the target price? All right, so target price, okay, during that time, probably we set based on the previous high, 596, for example. 596, right? It depends on the individuals. Some people they set 3%, some people they set 4%, some people they set 5%. So for this case, I set 3%, for example. So the margin requirement is depends on the Phillip Nova platform. Okay, some platform they give 10%, some platform they give 20, 30, or 50, or maybe, all right? So maybe I just put 30, okay? So for this case, right, assuming WDC, all right, is 30% margin requirement. So what does that mean? That means, all right, you just need to put 7,800 to buy 50 share, all right, for CFD trade in Phillip Nova. So instead of buying a full settlement of cash, $26,000 for 50 share, you just need to, deposit 7,800 to buy 50 share. So what is the risk reward ratio? Right? That means we want to know, does this setup attractive or not? All right? Does this setup attractive or not? How do we measure? Okay, how do we measure? All right? So we measure based on the, what we call that, target price. Okay. So the target price potential target price, potential profit is 14%. So what is the risk? The risk is 3%, all right? So what does that mean? So that means the risk reward ratio is very attractive. So that means when you are right, you make 14% if you are using cash, and if you are wrong, okay, you lose 3%. So I think this is a good trade. But like what I mentioned, if you know how to use CFD, all right, which is a risk, what we call that, a leverage product, it will multiply your profits. So I give you the example. If today you only know how to trade using the cash, you fork out $26,000, you make 3,008, you make 14.62%. If you know how to use CFD, assuming the stock is 30% margin requirement, you also make $3,800, but the difference is that you put less money. So that means you put less capital to make more profits. All right. So in CFD, you could see that your profit in terms of percentage is different from your cash trade. Now it sounds complicated for new beginners, but you need to learn, right? Okay, and make sure you need to learn from the right person, like me, who have the experience in the in the stock markets, in the CFD, and it's just like introductions how I use the CFD calculator, and you can own it, all right, if you sign up for my class. And on your right hand side, stop loss limit order, OCO limit order, all this is advanced order type I will share with you, and is to protect your profit and capitals. All right, so the calculators will be give it to you if you sign up for my class. So in total, add up, it's only 2,679 US dollar. Very cheap, right? Okay, 26 week, okay, it's not 2 days, 26 week. Okay, so today only, all right, 697 US dollars. All right, you divided by 26 week, 1 week it only costs you $26.80 per week. All right, imagine, okay, let's say for example, you go for dinner with your family. I believe you will spend more than $26. But today, when I share this with you, right, $26.80 per week, you learn how to trade in the US market, how to look for potential stocks, you learn how to enter, you learn how to exit, you learn how to take profits. So that means you only need to learn one time, and what you learn, okay, it will stick with you forever. It's not the food that we eat. After eating already, of course, we'll pass motion. But the knowledge that you learn, okay, the 26 week, it will stick with you forever. So just in case, you are being retrenched because of the AI. So that's why you need to prepare earlier. Don't wait for the thing to happen. Okay, you learn and then you apply and you can retire. So this course is suitable for all type of investor. If you are still working, of course, it will be good for you. All right. While working, you learn new skill set. So if you are retired, of course, I believe this class will add value to you. And if you are beginners, of course, you will learn, what is price actions and how you trade the leverage product. Of course, you can choose to trade normal stock. That is your choice, all right? But the strategy can be applied on any, okay, products. So today, all right, I want to thank Phillip Nova to give you the promotions for this class. All right, what does that mean? Okay, the qualifications, okay, listen carefully. Period is from 18 June to 13 June 2026. 541, and you save US dollar $154. Now, how does this work? Okay, listen carefully. Now, original price is $697, and Phillip Nova, okay, will credit Singapore dollar $200 if you fulfill the criteria. 200 Singapore dollar is equivalent to USD $154. And at the end of the day, all right, you just, you save 154, all right, you end up you just pay 541 instead of $697, all right. So what is the step? Very simple. What is the step? Number one, okay, sign up for my class today. Open Phillip Nova account tomorrow. Okay, you can do that. Open account, or you want to do that tonight also can. And after opening your Phillip Nova account, you just need to deposit 5,000 Singapore dollar into your Phillip Nova account. Now, if you already have a Phillip Nova account, you can use your existing account. All right, you don't need to open a new one. And remember, to deposit $5,000, you must do it before 30th June. So 30th June is the deadline for you to qualify for Singapore $200 trading credit. And number 4, maintain the $5,000 fund until 31st August this year. Very clear, right? Okay. Again, the qualification periods is from now, 18 June to 30th June. All right. So the benefit for eligible participant, Singapore US $200 trading credit will be credited into your Phillip Nova account by 31st August this year. Okay. And additionally, promotions commission rate for your Phillip Nova account is only 0.01% for US stocks and ETF until this year, 31st December. So make sure take your action right now, okay, to enjoy the promotions. Like what I mentioned, the cost fee is $697, all right? And if you fulfill the criteria, you will get 200 Singapore dollar credit into your Phillip Nova account. And this is the link, all right? So once you have the link, you just go ahead, fill up your name, your email address, and the phone number, and make the necessary payment, all right? And then our colleague will follow up with you how to open the Phillip Nova account. And if you already have the existing what we call that Phillip Nova account, you can actually use your existing account, all right? And to fund your account, make sure you fund your account $5,000 before 30th June, okay? So I think this is quite clear, all right? And with that, right, of course, what do you get? Additionally, you will get my ebook, Top Hong Kong Stocks that you must watch, particularly if you are looking for Hong Kong, or if you are looking to learn how to trade Hong Kong markets. This is the ebooks. And the second ebook you will get is the Powerful of Chart Pattern. Now you have to understand the pattern always repeat itself. So once you master or learn the chart pattern, you have the advantage. So within this ebook, right, there are few chart pattern that I have identified, and it keep repeating itself. So once the earlier formations is being formed, we will take actions to apply our strategy on how to trade the stocks. All this ebook will be given to you if you sign up for the class tonight. So this is some of my result, okay, because you know, I am a trader, all right? So a real trader is not theory. So if you look at last year, October, all right, so the profit was 126%, okay? The profit was 262,000. And November 2025, profit was 27%, $42,000, and December last year, 21%, $56,000. So what about January this year? All right, 40%, 123,000, and followed by March, whereby the war begin. I still make 64%, $43,000. So what do I mean? What do I mean by that? All right, what do I mean by that? That means if you are looking to learn how to trade in the markets, make sure you learn from the people who have the experience, the people who have the track records. And I want you to take the advantage with the Phillip Nova promotions, all right? Because, you know, when you attend this preview tonight, right, it's a very special of you, because there are many people who out there, you know, party, drinking, all right, or do nothing, look at the social media, but you choose to be here. Okay, you choose to be here. So there must be something of you, you know, want to learn how to make money in the stock market. And right now, this is the chance for you to take, and make sure you take the advantage for the Phillip Nova promotions. So frequent asked question, is this an ongoing class? Yes, this is an ongoing class, already started. Now, why is that so? Let me explain to you. The class already started. There is advantage. Reason is because stock market is dynamic, so that I'll be able to, you know, refer to the current market situations and to share with you what strategy to apply based on the current market situations. So it's not like a traditional teaching. It's like, for example, some people who are looking from a basic, intermediate, and then advanced. No, because I have attended many classes, and I realized that to learn how to trade in the proper way, the best way is you learn and then you apply. You learn and then you apply. All right. So just, you know, take, for example, our traditional school. Okay. I mean, we started with kindergarten, primary school, secondary school, high school, universities. So it takes a very long time, okay, in school. After that, when you are graduated, and then you look for a, you know, for a job. So wouldn't it, you know, might be too late, because there are many competitors who have, you know, just graduated. But if you learn while doing some project, doing some work, you have the records, and after you graduating, you have higher chance to be hired by the company. So same thing here for the stock tradings. You don't wait to complete the whole series of your course, because I can guarantee you, you will forget everything. All right, because human being, you know, you have to understand our mind. We need to see the graph, we need to see the chart in order for us to learn, absorb more easily. When a real situation happen, and I can relate the real situations with you with a proper solution and strategy, that's how you learn. Okay, it's not for you to wait, you know, after the class finish. All right, so that's why this class is special, and I believe 26 weeks you have ample time to learn and apply the strategy to see the result. So is this class suitable for beginners? Yes, it's suitable for all type of the investor, because you can choose to trade normal stocks, CFD or ETF, or leverage ETF. So if you do not know what is US market and Hong Kong market, no worry, I will share with you my US stock watch list. I call it multi-million watch list, and you know, it make things easier for you to save your time. All right. And what if you miss out the online class, like what I explained to you? No worry, there is a recording, and I will upload the video into the membership site, which I show you. You will have to get the access to the membership site. And in fact, I want to share this with you. We pay for the membership site every month. Now imagine every video that we have uploaded will take up a lot of the storage. So when the storage is become bigger, we got to pay more money, but we still stick with the price because we want to add value to you. That's why 26-week program, I believe no one, okay, can do that. All right, if you go outside, most of the time they teach you for 2 days. After 2 days, most of the time is on your own. So I believe not everyone, okay, can learn very fast. I'm a very slow learner, so that's why I decided to create this class. 26 week is to cater for everyone, particularly if you are slow learner. No worry, this class is for you. If you are a very so-called experienced, you will learn something new in this class. So what is the difference as compared to other class? Like what I mentioned, this is a special class for 26 weeks. And most importantly, what I mean is that you leverage on my resources. That means my trading skill, the tools that I have created already, I can share with you. Watch list, I have spent a lot of time to analyze the stocks. I will share with you so that you could save your time. So you could imagine this class, it's not just about strategy, it's not just about stock, it's about leverage on individual resources. Okay, so does this program have a skill set? No, this program is my personal course. There's no skill futures. So what happened after 26 weeks? Okay, after 26 weeks, you can choose to renew. Okay, the renew price is $497, but you no need to make a decision right now. Okay, what you need to do right now is to focus on sign up for this class and focus on learning how to trade in the stock market with different strategies that I'm going to share with you in the class. Now, to add on, some of you might ask, hey, Caleb, this is ongoing class. How am I going to catch up? No worry. So that's why the membership site, all the video, right, is to help you to onboard you, into my class so that you'll be able to know how the class is being structured and how the strategy could help you. So once you in the live class, right, or live coaching, you'll be able to catch what am I talking about. So this is my colleague, all right. He'll be helping you to answer the class inquiry. So his name is John. So you might want to scan his QR code, all right, so you can ask him any question about the class, all right. So yeah, so maybe John, you want to share the link in the chat room, okay? And with that, right, I have end my presentations. Maybe I would like to invite Sean to talk a little bit about the promotion because they are the one who sponsor the class. Sean, on you.
Yep. Hi. Thanks everyone for sitting in through the session. Thanks Caleb for giving us the insights. I think Caleb has covered very clearly about the cost and the entire promotion. So I will not go deep into it. The main point is sign up by 30th June and then make a payment for his course and then deposit fresh funds of $5,000 into your Nova account and maintain the funds to 31st August. And the perks, as per what Caleb mentioned, $200 of trading credits will be credited into your Nova account by 31st August, and promotional commissions of 0.01%, minimum 188 USD for all stocks and ETFs listed on US exchanges till 31st December 2026. Now, I think it has been a very insightful session, and one of the key takeaways that we can learn from this session, right, is that the market is always moving, right? And there's a lot of emotions that we get into when we are investing or trading with our own money. And just now what Caleb mentioned, the part about community, I think that's really important. When the market is riding high, when you're making profits, it is a joy to share with people and with the right community. Likewise, when the market is going down, it might be moving against you, you might be having a bad day. Having a community is also great because you can really share your thoughts, and there'll be like-minded individuals. There'll be people who are more experienced, people like Caleb, who can actually guide you into, a certain framework or a certain mindset to approach things. Yeah. And then for Nova, we're also here as a broker to support you, regardless of whether the market is trending up or trending down. We look at all the news very objectively. We provide you with the breaking news, and we also ask our analysts to really analyze certain macro sentiments, which would hopefully help and support you in making the right trading and investment decisions. Now, if I may end off the entire webinar, right, we have one more slide. Caleb, if you don't mind, can you go to the next slide? Yep. So for all of you who stayed through, thank you so much. We have a QR code here for you. We would really appreciate it if you could scan and take a look at our post-event survey to give us some feedback about today's session. And also, we have the account opening link within this QR code as well. And like what Caleb mentioned just now, there will be a collaboration between Phillip Nova and Caleb for his trading course, and the promotion T&Cs are also within this QR code. So for those of you who want to find out more details, you may explore the T&C page. And like I mentioned just now, Phillip Nova, over here at Phillip Nova, we have analysts who's looking at the market, and we also manage a Telegram channel where you can actually look at the different types of news that's going through. So we have things like stock pick of the day, what you can look at. We have things like what's the breaking news in the morning for all the major global markets that you can look at. And of course, we have also polls over there to find out, what investors and traders are into, and we will sometimes tweak our flavors to, do things which might gather your interest. Yeah. And then maybe just to also recap, over at Phillip Nova, we offer multi-asset trading. So just now Caleb mentioned about CFD shares, right? So CFD is a leverage instrument by itself, right? And it gives you the ability to leverage your cash to take on a larger exposure, right? And then for those of you who tend to stick towards the equity side of things, you can do the same with stocks, with shares financing. Like I mentioned earlier, shares financing, it gives you a certain leverage factor also, depending on the stock that you are going into, right? So for some stocks, you can get up to 3.33 times of leverage, whereas for CFDs, the leverage factor tend to range wider. It could go up to 20 times, go up to 10 times, depending on the CFD stock itself. Yeah, so that's one thing to consider. The other thing is really the FX conversion rate I mentioned. When you travel, you look for the best money changer to convert your rates. So why not for your investments and trading journey, right? So we are also here for you for that, providing really competitive rates. And of course, lastly, we have been here for more than 40 years as a local broker. We have been evolving together with the market landscape, providing and offering more and more products to you as a customer and as an investor and as a trader. So if you have anything that you'd like to find out more about, feel free to drop us an inquiry. All right, you can drop us an inquiry within this chat itself. We will take Q&A, or you can contact us directly, or you can look through the Phillip Nova website to find out more. So either way, feel free to contact us, and we will end off today's session with Q&A. If there's any Q&A, please feel free to type into the chat. We'll leave the space for 2 minutes before we end off the whole session. I'll take a pause here. Okay, I see there's no immediate question. If let's say you have any, feel free to really contact us, and then we'll definitely come back to you. And like what Caleb shared just now, if you have any questions about his course, there's also John from Caleb's team that you can contact for more support. Otherwise, that's all for today. Thank you everyone for attending this webinar. This webinar will be recorded and it will be shared on YouTube for everyone to rewatch again. Yeah, that's all. Thank you so much, Caleb, and thank you everyone for attending. Yep. Good night.